to compete, and we compete with nations that are getting negative rates, something very new, meaning they get paid to borrow money, something that I could get used to very quickly.
Donald Trump at Davos saying he can get very used to negative interest rates, getting paid to borrow money. Hello and welcome to another Smaulgld live stream. Tonight's topic is Donald Trump. I can get very used to negative interest rates. Now, it makes sense that Donald Trump could get used to negative interest rates. He's mentioned in the past he's a low interest rate kind of guy. Now, what does that mean? Well, he's in real estate. And anyone knows anything about real estate finance, you finance your projects, and if you can get it at lower rates, chances are your project's going to do better because the cost of paying off your loan is going to be lower if the rates are lower. Now, that doesn't mean that's a good thing in general, because as we've seen, when interest rates are low in a normal economy, it's possible, if the interest rates are low because they've been driven low artificially, that people may make what's called in the Austrian School of Economics malinvestments. They'll be tricked by that lower interest rate, and they will invest money thinking there's some type of signal that the economy is good, and that's why the money is cheap. And then it turns out it's not, and now they've got a project on their hands. They've risked their money. They can't pay back the loan. And not to worry, in a normal capitalist environment, that malinvestment gets liquidated, meaning that, oops, sorry, made a mistake, but bankruptcy sorts that out. Well, in today's world of artificially low interest rates, I don't think anyone's being tricked at all. I think everyone knows the game. Everyone knows that interest rates are not artificially low for a temporary period, but they are essentially now the rule. Whether they're artificially low or negative is really your only choice, not whether there's going to be a big boost in interest rates. It's really how low can they go. And we've seen that entrepreneurs are not tricked by low rates. They go into it expecting to make money, and they will make money if they make the right investments. Not the right investments in the traditional sense that you borrow a lot of money, you pour it into the business, and the business turns a profit, you pay back your loan. No, you invest a lot of money, you bring a company to market, a public market, and because there's a lot of liquidity out there, because people know there's no interest to be had in putting money in savings accounts, they're going to chase stocks, and if you can get your stock publicly traded, even if it doesn't make any money, you're going to have no trouble paying off the loan because you're going to sell the shares to the public. The shares are going to rise, and you can pay back the debt very easily that way. And so you can see why Donald Trump is a big fan of that. Now, saying I could get used to negative interest rates, and he's essentially complaining that other countries have negative interest rates, and that gives them advantage. Let's play it again here, if you missed it the first time.
And we compete with nations that are getting negative rates, something very new, meaning they get paid to borrow money, something that I could get used to very quickly.
And it is indeed an advantage. Now, you could say steroids are an advantage to an athlete. Well, maybe they are short term, but long term, that player probably, first of all, it's cheating, but won't be around very long if they use massive steroids because of the toll it takes on the human body. We've seen some athletes succumb to steroid use, heart attacks, liver damage, and so on. And essentially, it's because it's an artificial boost to the body, and the body performs better, but it's not meant to perform at that level. It's the same with artificially low interest rates, negative interest rates. You're supposed to get a rate of interest when you lend money because you're taking the risk. You're not supposed to get paid to lend money. That's turning the whole thing on its head. But the world in which we live today is one in which 30% of global debt is negative. So the question becomes, and it's not really a philosophical question, it's really a real politic or practical question for the United States, is should the United States be offering a rate of interest when other countries are being paid for their debt? And the answer is, I think the United States is doing the right thing. I think careful what you wish for. The United States should not want to go to negative rates, not just because it doesn't make any sense, and in the long run, it's not a good idea to have massive debt and negative rates, but also the United States does need to distinguish itself as if the dollar is supposed to be the world's reserve currency, and you want to continue to be able to attract borrowers, because the United States economy is based on borrowing, as we're going to see in a minute, pretty much every other economy too, including China, then paying a rate of interest is actually a competitive advantage. And this is one of the reasons I mentioned years ago when many of the commentators were saying the Fed could never raise interest rates. I was saying they have to raise interest rates. They have to keep the dollar competitive. Remember, having done 4 years of QE, a lot of confidence was indeed lost in the U.S. dollar. A lot of countries were thinking, why should we buy treasuries if they're just going to print the money and lower interest rates? It's debasing the dollar. Well, since then, a lot has changed. Every other country is now in the race to debase, and we've seen the ECB top the Fed in QE by doing a $5.5 trillion QE compared to the U.S.'s $4 trillion. We now see Japan doing QE, Japan going to negative interest rates, ECB going to negative interest rates, and the U.S. has not done it. The Bank of England going to negative interest rates. We're seeing now China putting money into the repo market. They're all in the race to debase. And Trump is bemoaning the fact that, well, we're at a disadvantage, but in a sense, the United States is probably at an advantage keeping its debt relative to the others somewhat under control. Now, it's hard to imagine that you would think the United States is the paragon of fiscal responsibility, but compared to what other central banks are doing, other economies are doing, it's not doing that poorly. Yes, $23 trillion deficit, $150 trillion in unfunded liabilities, so security, Medicare, Medicaid, and so on. But other countries have it worse. And it's not whataboutism. It's just what about all the other countries doing the same thing, but they have less of an ability to pay back their loans because there's not really the demand for the yuan, the euro, the pound, and other currencies as there is for the dollar. And by keeping interest rates positive, the United States can maintain. That's one of the reasons, one of the causes for wanting to hold the dollar as a reserve asset, because you can hold your dollar-denominated assets in U.S. Treasuries, which do pay a rate of return. Now, none of this is new. It's interesting now that QE has been around so long, since 2009 in the U.S., that it is not even considered some type of temporary emergency measure. Just like in 1971, when Richard Nixon ripped up the Bretton Woods agreements, which had the dollar backed by gold, he issued that statement that the U.S. would no longer allow the convertibility of the dollar from foreign central banks into gold at $35 an ounce. He was temporarily removing that right and obligation of the United States to turn over the gold for $35. Well, that temporarily has been in effect since 1971. Similarly, QE was meant to be a temporary measure. Now it is considered a permanent tool in their toolbox to fight inflation or recessions or whatever they want to print money for. Printing money is no longer looked at aghast by onlookers and saying, oh, you can't do that, you're debasing the dollar. And the reason is every other country has now done QEs. It's just what they do. And in fact, the U.S. is looking at, the Fed is looking at and reviewing how QE went. In the latest minutes, they were saying that they've done QE. They purchased a bunch of assets. They didn't really have any negative impact. It was a salubrious impact. It was a good thing that they had done QE. They probably could have done more. And they probably could have bought different types of assets that might have been more useful other than just mortgage-backed securities and U.S. Treasuries. And so they're going to come back this year with a proposal saying that next recession we may want to buy corporate bonds like the ECB does. We may want to buy ETFs like the Bank of Japan does. We may want to buy more assets because we learned how to do it last time. We did QE for 4 years, and look how great we're doing now. That's the mindset. So it's not unusual, as Tom Jones would say, for Trump to be thinking that, hey, I want some of that free money too. And he is right in pointing out that low interest rates do drive stock market gains, because the lower the interest rate, the more liquidity, and there's two factors there. The money's got to go somewhere because there's more liquidity, and the second is it's not going to go into interest-bearing accounts because there are no interest-bearing accounts worth putting your money into. They don't even keep up with the supposed minimal inflation that we have, and you can buy stocks like Tesla, which make no money and just perpetually rise, and that's essentially what's driving the wealth effect in the United States, the so-called booming economy, which the stock market does contribute to a certain percentage, a few basis points of the GDP. And that's why you can see why Trump is looking for negative interest rates. Now, negative interest rates, I was looking at, I keep files on things and just in general. Let me read. This is from I was mentioning, this is not a new idea. When I say not a new idea, negative interest rates have taken hold to the point now we know there's 30% of global debt is in negative interest rates. But in 2016, there was a series of, I just have these headlines written down, tons of them. And at the time, I remember thinking even before 2016 that the Fed probably wouldn't want to go there. And Powell said recently they're not really wanting to go to negative interest rates. They'd rather just turn on the QE, the repo, and just print the money because they think that's more effective. And I agree. I think it is more effective than just messing around with interest rates. But look at these headlines. This is from 2016, and to start from the beginning of the year. Gold higher on Bank of Japan negative interest rates. Well, you're going back to 2016. And yes, indeed, gold is. Silver will rise on negative interest rates because you're taking away the argument that gold doesn't pay interest and it just sits around. Well, yeah, it does, but it doesn't cost money. It's not like when you put money in a negative yielding bond where you have to pay back. So that makes gold attractive to the extent that bonds don't pay interest either. And then, of course, gold is in scarce supply, and you can go through the whole arguments why gold and silver may be good, solid assets to hold, especially in a negative interest rate environment. Here's some more headlines. February 2016, Fed wants to add negative interest rates to bank stress test. So now they're realizing that negative interest rates back in 2016 were starting to become part of the overall environment in which you had to test the banks. Now here's one. New York Fed President dismisses negative interest rate talk. That's February 2016. I'm going to scroll up to May 2016. Fed Chair Yellen, we have not yet ruled out negative interest rates. Okay. Now I think they have, but who knows what will happen. If there's a real big recession, by the way they measure it, I think they would want to print the money, do as much QE as they could, and go to negative interest rates, especially if the rest of the world was further deeper into negative territory. Japanese negative interest rates, February 2016, caused cash hoarding and demand for safes. That makes sense. Now, this has been going on for a while. We've talked about this on this channel. Where do you put your cash when the bank actually charges you to hold your money? ECB, March 2016, well aware of negative interest rate risks. March 2016, JP Morgan chief says negative interest rates in the U.S. unlikely. So far, they're right there. March 2016, 24 countries have negative interest rates. Good for gold. March 2016, negative interest rates dig a hole for Japan. March 2016, negative interest rates boost Japanese gold demand. Makes sense. March 2016, world's largest reinsurer adds gold to reserves to combat negative interest rates. Now, why would they do that? Well, remember, a lot of reinsurers and pension funds, they have to somehow provide a return, negative interest rate, or at least an anchor to their portfolio. Well, bonds used to be it, but a negative yielding bond actually brings you down the line where you might end up not having a return if you have a negative return on some of your bonds. But here's an interesting one. April 2016, euro and yen rise despite negative interest rates. That's what we have to understand here. Things are not normal. Of course, you would think the euro and the yen should be falling like a stone because of negative interest rates. It's the same with the dollar collapse crowd. They keep saying dollars days are numbered, the debt is unsustainable. Yeah, but it's all relative to everything else. And the U.S. debt is far more sustainable because there's far more demand for dollars to pay back that debt than there is for other currencies. And there is no alternative currency, and it's not gold and silver because globally, people are not buying gold and silver, and they're not considering using it as a currency or any type of financial instrument other than certain central banks that are buying gold and hoarding it as a reserve. Here you go, June 2016, former Fed President Kocher Lakota, negative interest rates are nothing to fear. This is the normalization of negative interest rates. This is happening 4 years ago. July 2016, Fed's Fisher, he was the vice chair at the time to Yellen, says not contemplating negative interest rates. I think the Fed generally is not interested in negative interest rates. I think they're interested in lowering them. That's why they went through that period where they were at zero. They didn't go to negative, and they finally did raise rates when everyone said they couldn't. They raised them 9 times. Royal Bank of Scotland, July 2016, prepares clients for negative interest rates. July 2016, NatWest and negative interest rates for retail deposits. September 2016, negative interest rates at the center of Bank of Japan policy. Nice. November 2016, Swiss National Bank sees benefits in negative interest rates. So all of these stories back then were all leading us to the point today where it's normal for a lender to get paid to lend, or for the borrower to pay people to get the money. It just makes no sense whatsoever. The borrower is supposed to pay a rate of interest, and instead he has to pay someone to hold their money. And that's how they've normalized QE. That's how they've normalized this repo. Repo rates went to 10%. Well, they can't have them that way if they want to manipulate interest rates down. So the Fed just prints a lot of money every night and hands it out to 11 or 12 banks. And the rate goes back down to 2%. As long as you pay the bank back, as long as you pay the Fed back, there's not a problem. This is what we're dealing with. This is why we have the stock market at all-time highs, even though the economy, at best, is just muddling along. It's not like you have massive wage gains. You don't have massive inflation. You don't have real growth globally. You don't have much growth in the United States. And yet you have got a 35% increase in the stock market last year in 2019. Now let's look at the problem with negative interest rates and QE and repo is people then draw the wrong conclusions. They assume, well, this just means dollar collapse and gold and silver set to skyrocket. Now, indeed, these are favorable conditions for gold and silver to rise. But I saw the other day, someone was saying that, oh, look at palladium. I saw 2 people. One was a commentator on Twitter saying that, gold and palladium's gone up, and this means that this is where silver and gold are headed because palladium is a precious metal, and now everyone knows that you can't keep these things down forever. Then I saw Rosie Seabag on Gold Money saying something very similar. Keep an eye on palladium because this is what's going to happen to gold and silver. Same concept that hard assets are destined to rise, and we've got all this negative interest rates. We've got this QE going on, money printing. True, but the reason palladium's rising has really got nothing to do with any of that. It's about a commodity that's in short supply. Palladium is not any type of monetary metal safe haven that people rush to when they can't find any other place to put their money. No, what it's come down to is people can't find another metal to stick in a catalytic converter. That's all it is. And there's not enough palladium, and they haven't figured out how to use platinum yet in the catalytic converters for these cars that they currently use palladium for. That's all it is. So there is no connection, but yet you do see this kind of hope spring eternal where they're saying that somehow gold and silver are just destined to follow this this concept, and it's just not going to happen. The idea that palladium has gone parabolic, so gold and silver are next. The same with now platinum. Platinum may go parabolic, but again, not because of QE and repo and negative interest rates. You think about it, here's what I wrote here. Since September 2012, that's when the U.S. announced QE3. The Fed announced QE3, which is the biggest and baddest of all QEs. Ever since then, the price of gold and silver have dropped. In fact, gold is still not at its September 2012 peak, and nor is silver anywhere near, even though that was the biggest QE at the time. And when that QE ended, Bank of Japan started one, ECB, which had never done QE, did QE, and yet gold and silver are still lower. Of course, they do help, but palladium went from $300 to $2,300, and it had nothing to do with QE or repo or negative interest rates. It went up because people need palladium. Palladium is, say here, no monetary or safe haven history. In fact, palladium and rhodium's up even more. They trade like uranium. They've got nothing to, I guess they got that IUM at the end, palladium, rhodium, and uranium. They've got nothing to do with negative interest. These prices would be high no matter what. Now, you could argue maybe more cars are being sold because of negative rates, but that's not really what's driving the palladium price. It's simply a matter, it's a very, very limited amount of palladium in the world, and there's a big demand for it. And now, palladium may have an impact, as I mentioned, on platinum. If palladium continues to rise, let's say palladium 3x's or 2x's from here, at some point, all the work that they're trying to figure out and how to substitute platinum, which is only $1,000 an ounce, may come to fruition, and they may start switching, and that may drive the price of platinum up and may bring palladium down. But this, I don't think platinum and palladium have anything to do with gold and silver. And gold and silver are different. They're monetary metals. And you can say, but what about how useful silver is and how much we need silver, and silver's used in electronics, and we could not lead our lives without silver, and silver's in yoga pants and all other nonsense. It's a big difference. Palladium is an ultra scarce commodity in short supply and rising physical demand that cannot be substituted with paper contracts. So you could do all the manipulation you want of palladium, and I'm sure if they wanted to, they can try to drive the price down. If the main reason you want palladium is to stick it in a catalytic converter, driving the price down isn't going to help anybody, because people are just going to buy it at the lower price and demand delivery. So if you look at it, I don't have the charts tonight, but the amount of palladium that's in these ETFs and in the NYMEX trading vaults is de minimis. I mean, they're just trading literally around fumes, about a couple of bars of palladium, because there's just none there. Any palladium that's available in physical form has been called into service and been smelted down and put into catalytic converters. Now, with gold and silver, it's not the same thing. We've talked about this so many times with the silver pumpers trying to insist silver is so useful in our life. It is, but as a commodity, it is, yeah, it's in demand, but so is copper, tin, aluminum. All commodities are in demand, but there is no big silver shortage supply, and there is no soaring demand for silver. In fact, electronics demand is down the last 10 years, and solar demand is up single digits. They've learned how to use less, even though the massive increase in solar panels being produced, they're just not using that much silver in each solar panel. So on a commodity basis, silver is not rare. It's not something that there's a shortage of. It's being met. The supply is being met. And as a monetary metal, there isn't any great demand for silver there either. Now, for gold, there is somewhat of a demand, and that is driving the price of gold up. And I think that does have a lot to do with QE and negative interest rates. And as I've mentioned, eventually that will have something to do with silver too. Silver being having less of a monetary component to its demand than gold, but being a smaller market. If gold continues to rise, and I do expect it to rise, then silver eventually will catch its monetary demand as well. But gold and silver's investment demand can be satisfied with paper contracts, and that's always going to keep a limit on the upside to gold and silver as long as these markets exist. Now, a lot of people say COMEX default, COMEX collapse. Okay. assuming we don't have that, and a lot of people think that's inevitable. I'm not quite so sure about that. As long as these markets exist, then you're going to have controlled rises in the price of gold and silver. The reason you haven't had a controlled price in palladium and rhodium is they're not heavily traded, and there is no monetary component. There is no real jewelry component. So you see, for jewelry, you can put off buying jewelry. If platinum was used, and it is used in jewelry, and gold and silver used in jewelry, if the price gets too high, you don't have to buy a ring. You don't have to buy another bracelet, another necklace. So that cuts the demand down. Same with your investment demand. You don't necessarily have to chase. The time to buy gold and silver is not when it's skyrocketing and you're in the middle of a financial crisis. Like buying gold today in Venezuela is like shutting the barn door after the horses left. I mean, it's already too late. The gold is astronomically expensive in Venezuelan bolivars. So that keeps a hold down on the price. And again, as I mentioned, you can always satisfy a good portion, and they do, of price demand in gold and silver by paper contracts, ETFs, and so on. So that's why gold and silver, we had a whole show on this, are not in the same league as palladium and rhodium, and why palladium and rhodium are rising for entirely different reasons. Now, silver is more likely to rise like palladium and rhodium if there was some type of new demand, new commodity demand for silver, and some type of major shortage. But the difference is also silver has massive stockpiles, whereas there's really not a lot of known stockpiles of palladium or even platinum. So there's your comparisons, and we hear people making all of these comparisons, and I guess it's interesting with analogies. People like analogies, and the problem with analogies, they're a weak form of argument because you can always distinguish them, and they're not really. If you say something's like something, say, yeah, it's like something in that respect, but it's not like something in the other respect. And so, for example, I just came up with this analogy today, and I can rip this analogy apart, but analogies are instructive, but they're not definitive. So somebody says something's like something, it may make you think, and you say, okay, so for example, I say modern monetary policy, or whatever it's called, is probably like flying in after engine failure. The plane stays aloft, and the passengers may think maybe we don't need an engine after all. Now, the analogy there is that modern monetary theory could work for a while without any adverse impacts. You printed the money, you don't worry about the deficit, you don't worry about anything, and you just print for what you need, and everybody lives fine, and you don't see any consequences. And the analogy here is the plane engine could fail, and it happens, and you can run on one engine or no engine. The plane will fly for a certain period of time. It'll fly for a good distance before it starts to lose altitude and eventually crash. Now, there's all types of things you could pick apart in this analogy, why it's different, and that's the point. It's not like it exactly. And when people say, well, look at palladium, it's rising, and therefore gold and silver are going to rise. Yeah, well, they're both precious metals. Even gold and silver, they're not the same. A lot of people can't get that through their heads. They say silver is rarer than gold, and they go on the ratios, and they refuse to look at it in its totality. They just want to stick to an analogy. They want to stick to certain facts, which it is true that silver is used and thrown away more than gold. But then they draw the wrong conclusion from that. That somehow, because of that, that means silver's just going to go away. They're never going to reclaim silver, and therefore silver is going to go higher. Not realizing the reason they throw it away is it's not that valuable. The reason they don't throw gold away is because it is valuable. But again, I'm not going to get into that whole discussion today. And it's one of the things that people, I think, that's why they go on YouTube, they listen to these channels, and they're led astray, because then they just repeat what they hear. Even if the facts are correct, and sometimes they're not. When they say JP Morgan's buying silver, they're not even substantiated facts. But sometimes you get good information, good facts, but then they give you a conclusion based on an analogy. And that's where it sounds good, but it's not a full analysis. I'm not claiming I give full analysis. I'm just saying that when these things don't happen, then they get all annoyed. Well, the rest of the world doesn't understand. They haven't watched Mike Baloney. They haven't done that. No, the rest of the world is also capable of seeing everything too, and they just don't look at it the way you do. They don't buy the analogy. They don't think that the particular fact means something's going to happen. They may think it means the exact opposite, and so on. Chinese, a couple of articles about what's going on in China, and it's nothing new to me, and it's nothing new to you guys who've been listening to this channel for years. I've been saying for the longest time that China is a big debt-based Ponzi scheme, even more than the United States. And there's been this whole China to crush the dollar, dollar collapse, multipolar world, end of dollar hegemony. China, the United States just prints money. China produces. That's not true. China produces a lot of what it produces based on borrowed money. A lot of what it produces, it doesn't need. Oh, but they have infrastructure. Yeah, infrastructure that you build that no one uses and doesn't pay any revenue because no one uses the bridge and no one lives in the apartment building is not an asset. It's a liability. And it's a liability that you have to keep up. You have to pay taxes on. And there's no revenue coming from it. And the debt has to be paid. And those debts are in dollars. I don't think people think this thing through. They just see this and then they say, oh, China's got it going on. The United States doesn't do anything. The United States just borrows money. Dollar collapse. No. Yuan collapse is much more likely than dollar collapse. And then they also draw the conclusion that gold is going to rise because China's buying gold and they're smart, and Sun Tzu and so on. Sun Tzu. Yeah, but the gold will probably rise not because China's buying it, because the Chinese economy is the second largest economy in the world, and it's very susceptible to collapse because of the amount of money they've borrowed and the inability to pay it back. And here it is. China's Xi turns to financial experts to tame economic risks. China struggles to deal with the slowdown of the world's second largest economy. They embark on a new strategy placing financial, and they got all these experts, of course, Chinese communists. They think they can figure everything out because they're smart. They may be smart, but they can't figure out the entire economy. And we see here, People's Bank of China injects 250 billion yuan liquidity into the financial system via 14-day reverse repo. There's no difference in what the United States is doing, China is doing. This worldwide debt-based currency system, yes, the dollar may be the centerpiece of it, but the dollar is also the strongest of all of these debt-based currencies, and China's no different. They don't have a gold-back yuan, game changer, China to crush the dollar. They are they're neck-deep in debt. And in debt that they don't really have the ability to even pay back. No one trusts the yuan, and they've got to do the same type of financial shenanigans that the ECB does, that the Bank of Japan does, the Bank of England does, the Fed does, and they have to do it even more. Because while all the other Western banks are tossing money, printing the money in to keep their economies afloat, China's trying to not just keep their economy afloat, but to manufacture GDP growth that's 3 times higher than the rest of the world. And by doing that, they've already reached their Minsky moment. They won't be able to keep it up. This whole thing will implode one day, but no one knows when. But that's something that a lot of people think they know, but they don't. Now, here's one no one's going to believe. China's 2019 gold consumption drops on high prices, economic slowdown. This is a point have been making, that there does come a point gold gets too expensive. A smart buyer in China and India, they're not going to buy it. It's not going to be high forever. See, American gold bugs just think that the gold just goes higher, and that Chinese people wake up in the morning, Indians wake up in the morning, and all that's on their mind is buying gold at the highest possible price, and buying it before it all runs out and there's never any left, and that their whole policy is based on accumulating gold. That's not true. Gold is a item, it's a good, it is something that is valued, and it's valued at a price. It gets too expensive. Chinese and Indian buyers say, I'm buying that. I'll wait. I don't need an extra bangle. I don't need an extra gold brooch. I'm not going to buy it. Chinese gold consumption drops on high prices, economic slowdown. Another point I make all the time. You don't need an economic collapse for gold demand. Why? 50% of gold demand is jewelry. What do you need to buy jewelry? Money, cash, excess money. Well, when do you have excess money? Not in an economic slowdown, but when the economy is doing well. Chinese buy gold as a part of showing off their wealth. Indians buy gold to preserve wealth. Well, if there is no wealth being created in India, there's no gold demand for them to buy. There's no reason for them to buy gold. they don't have, if you have a bad rainy season, a bad monsoon, you have less crops, fewer crops. You have less extra rupee in your pocket. It means you're going to buy less gold. It's only Americans or people that watch these gold pumper channels that think that the whole world is just buckling down and preparing for the collapse in the multipolar world and the end of dollar hegemony and so on. Most of gold demand is a function of jewelry. Most of silver demand is a function of commodity demand, and a lot of gold demand for monetary purposes also, anytime something gets too expensive, they'll stop buying it. See, with palladium, they can't stop buying it. If you're mandated by law to have that catalytic converter in your machine, then you have to buy palladium. You can't say, screw that, it's too expensive, I'm not doing it. No, you have to buy it. But when gold gets too expensive, there does come a point. Most of the people listening here, if you've bought silver or gold or anything, if it goes to $3,000, you're going to be thinking about selling. And so will a lot of other people. What does that do? It drives the demand back down. It means now the supply is coming on to market. Silver goes to $50. I've heard so many people say they're dumping it at that point. Whereas palladium goes to $2,000. No one's dumping it. Why? No one has it. That's the big thing that people don't understand. Gold and monetary metals can't get too expensive because then people will sell them. But when something's in true commodity shortage, there's none to sell. And people will just pay, if they have to, the higher price. All right, and finally, just, I don't know if Peter Schiff is putting people on, but he's been posting every day about how, Bitcoin's a scam. And every day, for years, he doesn't like Bitcoin. Well, the other day, I find this hard to believe that this, or maybe it happened. I don't know. Maybe you guys know what I'm talking about, but apparently he had bought some Bitcoin or been given some Bitcoin, and the other day he went to open up his wallet and the password he typed in didn't work, and it said it didn't work and therefore Bitcoin's no good. I know that Bitcoin's no good now because I can't access it, and I was going to hang on to my Bitcoin until it went to zero, but now I don't have the chance because I lost it, and this proves Bitcoin is like terrible and it's a scam. I didn't realize how bad it was. And then he was saying how I had actually forgotten my password to my Bitcoin wallet, be okay, and I would eventually remember it or figure it out by trial and error. He's blaming the wallet, and I don't know much about what kind of wallet he had and why the password wasn't working, but take him at his word that his password was no longer working in the wallet, and he was saying it wasn't that because he would eventually figure it out, or he didn't forget it anyway. He knew his password. He said, I knew my password. It didn't work. There's no way to guess a random password that may or may not unlock the wallet. Now, first of all, not being able to guess his password is a security feature. And he's always said he understands Bitcoin. But here's where it got really interesting. It wasn't just that he forgot his password. He didn't understand the concept of seed phrases. Now, when you buy cryptocurrencies on an exchange and you leave them on the exchange, then you're subject to the exchange security features. And there, you just have to know your password. If you take possession of them like Peter did in a wallet, then you have to not only remember your password, but you have to remember a seed phrase in order to recapture in case your password doesn't work. Well, Peter said, well, since I never knew NEW, seed phrases existed, I never thought to look for one, let alone write it down. What he was saying was that the person, Eric Voorhees, who had set up the wallet for him, never told him about this. Now, if he didn't know that seed phrases existed, that means he doesn't understand Bitcoin. He's been going around for 10 years saying he understands Bitcoin. It's not that he's too old to understand it. He does understand Bitcoin. He understands it all too well, and he just knows it's a scam. Well, I would think not understanding that the way Bitcoin is held in private custody through a hardware wallet or a paper wallet is through a combination of securities, and one of them is having a seed phrase in order to recover it. He just didn't know about that. Now, I think that's staggering amount of ignorance about Bitcoin. I don't pretend to know everything about Bitcoin, but I know that one. And he just didn't know that, and he lost his Bitcoin because he lost his password. Now, that could argue for, well, that's not good because newbies don't understand, and if they have to understand all this, then it's just too difficult for them. Okay, I get that argument, but Peter's supposed to be of a much more intelligent, much more sophisticated investor, and somebody who actually purports to understand and know Bitcoin in order to have an opinion, a negative opinion on it. He wasn't saying this is too complicated for the average person. He was saying, I screwed this up and I didn't even know about seed phrases, which I think is remarkably ignorant, really, not to know about that. I mean, you can excuse somebody for not knowing, some casual investor, but if you're going to criticize Bitcoin day in and day out, I think it behooves you to understand how it works. And he was insisting, this is why I knew it was bad. I'll give you an analogy here. I knew gold was a scam, and he was saying he'd created a wallet, and all he was told was to just select a password to unlock it. He did that, and the password worked every time until Saturday, Eric. You never told me about the seed phrase. Yeah, so my point is, I knew gold was a scam too. I left gold in my driveway. No one ever told me to put it inside. No one even ever took it until Saturday, and then Saturday I go to get it and it's gone. No one told me about the safe, to put it in the safe. I knew gold was a scam. I don't know. I don't know if he's just trolling for... I think he actually doesn't like Bitcoin. I understand. I can understand not liking an asset, and I can understand liking an asset. But when you get to the point where you love an asset so much or you hate an asset so much, it's a derangement syndrome where when you hate an asset so much, it means you just don't take the time to understand it because you just don't deem it worthy, or you deem it worthy of the time you spend bashing it, but not worthy of the time to understand why you can bash it, why you should bash it. And it's the same thing when you fall in love with an asset. It's a form of derangement. All you see is everything about it is good. There's nothing bad about it. Gold's the perfect asset. Silver's the perfect asset. Bitcoin's a perfect asset. We see it all the time. All right. Well, I want to thank everyone for joining me tonight. I'm going to get to your comments and see what you guys are saying. I'm going to put up the fundraiser page there. Also, I do want to thank people who have been buying through the affiliate links, the gold, silver. I'm not giving investment advice to buy gold or silver or platinum or palladium, but if you are going to do so, on the Smaulgld site and below this BitChute and YouTube, there are links to SD Bullion, Money Metals Exchange, and Golden Eagle Coin, where you can buy. Those links will take you to the website where you can buy precious metals, and if you do through those links, Smaulgld gets a small commission, and that does help out the site. And I want to thank people who have been buying their gold and silver through those links, and also to the people who have been, not recently though, sending Bitcoin and Litecoin and buying Smaulgld Mugs, or supporting Smaulgld by sending items of value to Smaulgld LLC, P.O. Box 714, Dover, New Hampshire 03820. And of course, a shout out to the Smaulgld patrons and those who send small gifts via PayPal or are now on Subscribestar. Now, with respect to Subscribestar, I lost a Subscribestar member in between jobs, and that means I only have 4. And Subscribestar won't pay until you have 5 again. So if anyone would be kind enough to join, subscribe I think I have like $80, $90 locked in Subscribestar, waiting for the 5th Subscribestar member to join. So you can do that by going to subscribestar.com/smallgold-s-mug-stacker-club. All right, let's see what you guys are saying in the comments section. All right, let's see here. Pablo Quina says, Buenos tardes. Okay. Fiona is here. Mintmark SI, if I were 22 trillion debt, I would love negative interest rates too. Well, that is one way of solving. Remember, one of the things they used to always say is, what happens when the interest on the debt itself becomes unpayable? Well, it doesn't if you're a negative interest rate. So it is one way out of the debt situation, is to go for negative interest rates. Kick the can down the road, says Pablo. Is the road a dead end? Yeah, the road's a dead end, but the road could go on forever. I mean, they can keep building more road, and yeah, it's a dead end eventually, but unlike the Truman Show, they can just keep pushing out the boundaries, I suppose. All right. right, let's see. Comic Commando, negative rates, interest rates, here we come. Everybody drinking at the local VFW hall. Okie dokie. As I mentioned in the show, Comic Commando, I don't think the U.S. wants to go negative. I don't think they will. They'll probably go back to zero, but they'll probably just buy more assets. I actually think, I don't know which is worse, but I think buying assets is even... There's a limit to how far negative you can go. There's no limit to how much money they can print. I think they're going to do that more. Pablo says they can see bars financing beer with negative rates. When Trump mentions negative rates at Davos, did Greta yell out, "How dare you? Yes, you have destroyed my childhood with negative interest rates." Yeah, that's true, Comic Commando. She hasn't enough schooling to understand basic interest rates. Okay, Sean Saylor. Did I need to borrow the money? No, not at all, but they're going to pay me 12% to borrow it for a year, and I can use the money for other things in the meanwhile. Okay, that's a bet. There you go. Mike Hearney's Smaulgld. Oh, now Lewis said silver is a monetary metal. Yes. Now, Mike, I will forgive you for not listening to every Smaulgld podcast. There's no reason why anyone would. I mean, no one listens to all the podcasts. I'll state succinctly my view on silver, so you have it. When people say silver is money, period, I say no, it's not. And I go through the definition of money: divisible, desirable, fungible, medium of exchange, unit of account, and so on. The problem with silver is today it does not meet the medium of exchange easily, readily acceptable, universally accepted. It is not. People do not use silver as a medium of exchange or a unit of account. Now, that means silver has a monetary history for sure. Yes, silver was money for 5,000 years. It met all the requirements of money, but today it's clearly missing the used as a medium of exchange, unit of account today. It's not. It could be, but it's not. Just as horses were once transportation, they could be used for transportation today, but they're not. Cars are. If there was a blackout, yes, maybe people would use silver as a medium of exchange. The point is, silver has a monetary history, but it is not currently money. Also, silver's primary demand today, unlike in the past, used to be minting coins. That was the primary demand for silver back in the 50s, 60s, when silver was used to mint hundreds and hundreds of millions and billions of ounces worth of coins every year. 550 million ounces were used in 1964 to mint coins just in the US alone. Canada, Australia, England, China, Italy, India all had silver coinage. They don't have it anymore. So that demand is gone. So your monetary demand is gone for silver. Central banks don't hold silver. The United States got rid of silver certificates in 1968. So in the world, silver's investment demand is limited now to people buying silver eagles, silver rounds, Austrian silver philharmonics, and silver ETFs. The percentage of silver that is purchased of the overall silver demand is small. It's 10-15%, which means silver's monetary component, it's not even monetary, it's an investment component, is tiny compared to silver's overall demand, Mike. Silver's overall demand is mostly a commodity play. Commodities for electronics, industry, some photography, solar panels, yoga pants, chemicals, and then there's some jewelry and some silverware demand, which is larger than the investment demand. Okay? So silver is a monetary metal to an extent that a small percentage of its demand is for investment. And what I say about silver rising due to its monetary value is when gold, which still retains a monetary component. Why? Because 40% of its demand is purely just to buy and hold in bullion form. Central banks hold bullion form, investors hold bullion in bullion form, and the other half is jewelry, and then there's a little bit of industry. And a lot of the jewelry is investment jewelry, as opposed to throwaway silver jewelry. So, when I say that silver has a monetary component, I call that the dormant monetary component that will get ignited when gold's monetary component starts to launch. And that's what's starting to happen now. We saw silver spike and dive in 2009 to 11 when it finally spiked to 50 and then dove again. In 1979 to 1980 when it went up to 850 and then went down again. In both instances, silver followed a gold bull market and eventually surpassed it because people reignited, investors reignited the monetary component of silver. And it's a small market, and even though it's only 10-15% of silver's overall demand, the amount of money pouring into silver during a monetary rush into gold and the spillover into silver makes silver rise. So I haven't changed my point of view. Silver is currently not money. It is historically a monetary metal, and it maintains a dormant monetary component. Gold today still retains a monetary component that is active in central banks buying it and Basel I having it as a tier 1 asset. That's the difference between gold and silver. That's why I've been saying the gold-silver ratio has been sustainable at 50, 60 to 1, 70 to 1, 80 to 1, 90 to 1, because gold rises on the basis of its monetary demand and silver demand, a jewelry demand, whereas silver's dormant investment demand is still dormant and will not get ignited, in my opinion, until gold goes much higher. All right, Sean Saylor, I ran it up on phone. You guys are talking amongst yourself here. Sean Saylor, Stillwater sold their palladium mine in 2017. Yeah, that was a bad idea, wasn't it? Albert S. Bitcoin lessons should be given in elementary school. No, actually, Peter's making a good point inadvertently that Bitcoin is not ready for prime time. Someone can't just set up a wallet and say, here you go, Peter, here's your Bitcoin, and then tell him you're on your own. Now, the reason I criticize Peter in this is, though, if he wants to be a financial expert and he wants to compare and contrast why gold is better than Bitcoin, then he has to know about seed phrases. He can't say, when it comes to his, I didn't know about seed phrases. That's like saying I didn't know gold was AU or AG, or which one is it? I'm not sure. No one told me about the periodic table of the elements. Yeah, Comic Commander says he didn't do due diligence saving his password, and somehow that's not his fault. Well, again, it's not. If he's just a casual, someone just gives you bit and you don't know any better and you don't care, yeah, that's fine. But he purports to care and actually purports to say he knows about Bitcoin. That it's not like he's ignorant. He says he knows about Bitcoin. He studied Bitcoin. I mean, that shows a startling ignorance if you don't know about. The Salivate Metal is here. Hello, Salivate Metal. Greetings. Good to see Salivate Metal. All right. Mike Baloney is amusing to listen to, says Roger. Okay, Salivate Metal says, I would almost say that silver is more hibernating money based on your analysis, which I agree. Okay, hibernating. I agree with that. It's basically, if silver was perpetually in monetary demand, the price would be much higher. It's not. There's a reason for that. People don't want to understand why silver has been down since 1974 and has only had these spike and dives. And those spike and dive periods, they coincide with sustained gold bull markets. Gold has a far greater built-in monetary and jewelry demand. Silver is mostly traded as a commodity. If 70% of its demand is commodity-based, and don't just listen to, silver is so useful in our lives, all metals are useful. The point is that the demand for silver is not exploding relative to supply the way it is for palladium. That's just a fact. You can say, they use silver in this, and there's so many uses for silver. Yeah, there are, but look at the numbers. They're not exhausting silver. See, palladium has like 2 mines in the world. I'm exaggerating on the low side. There's not that much palladium being produced. And there is a significant demand for it relative to that supply. That's not the case for silver. All right. All right. Well, that's about it for tonight. I want to thank everyone for joining me, and we will see you soon. A multitude of gratitude to salivate metal. Good night. Whatever happened to Bernie? The 1%. They've kept me. Bernie.